Hi, everyone. Thanks, panelists, for joining, and thank you, audience, for logging in. I know there were a few people logging in from Asia as well, so appreciate the interest and staying up late. Yeah, to get started, Sebastian and Chris, I think it'd be great for the audience to get an introduction of your backgrounds and your involvement in DATS as the first step.
Great. Who
Would you
goes
like to get
first?
started, Sebastian?
Sure. Hey everybody. I'm Sebastian Bea. I'm the president and CIO of ReserveOne, which is a company that is going expected to go public this year via a business combination with a SPAC known as M3 Brigade Acquisition V Corp. That was announced back on July 7th, and the expectation is that we'll go public with approximately $1 billion of capital in Q4 of this year on NASDAQ. Our ticker will be RONE, assuming we are declared effective by the SEC. My background is in institutional markets and institutional asset management. I've spent over 20 years of my career doing that. The first 12 of that was at CSFB, or Credit Suisse First Boston, dating myself. That started in May of 2001 in Manhattan. And then I was off to BlackRock in 2012. Most of the time spent there with the institutional equity business known as systematic active equities. So if you're into factors and quant stuff, that's one of the original quant managers in the world. And then I did my entrepreneurial tour of duty over at One River, which was a fantastic experience where we created One River Digital. And that was sold to Coinbase to create Coinbase Asset Management, where I was for the last 2.5 years. And that business is doing well and well on its way to success, but it was time for me to do something a little entrepreneurial yet again. And here I am at ReserveOne as the president and CIO with our CEO, Jamie Leverton. So really great to be here. Excited to be part of this webinar, and great to see old friend Chris Perkins and new friend McGronk.
And you forgot the most important part. You're a silver medalist, right?
Yes, although I think and this bleeds into your background, Chris, but I think USA is undefeated since 1776 or something like that. I forgot what the tagline is. We did get silver. We did lose to the French, but that is true. I'm an Olympic silver medalist for the United States of America. My uniform was spandex, and I was going backwards in a boat. I think your uniform was a little bit more substantial.
I don't know about that. Yeah, Chris Perkins. I did start my career in the U.S. Marines, and I was in the war in Iraq. Came home, and also worked quite a bit on Wall Street. First at Lehman Brothers, so I'm dating myself now, and then Citigroup. I ran a number of derivatives businesses. I'm the president and one of the managing partners at CoinFund. We have both seed, venture, and liquid strategies. We're one of the more prolific investors in the DAT space, and happy to walk you through how we think about this really important part of market structure that we think is going to have an important place going forward across our markets.
Great. Yeah. Thanks, Chris and Sebastian, for the great introductions. So, Chris, with that, I'd like to transition into our first question for the panel. So, for the audience out there, what is a DAT and how is it different from directly investing into cryptocurrencies or using something like a BlackRock ETF?
Yeah, I could take that one if you'd like. So I don't know if there's a perfect definition of DAT or digital asset treasury company. Generally speaking, these are public companies. I think that's probably the best way to describe it, um, whose primary business model tends to be the acquisition of an underlying crypto token, or in Sebastian's case, series of tokens. And so, like, there could be an operating company, but one of the primary, I guess, the primary operation is to actually buy these underlying digital assets. Now, what makes it special is that these are generally public companies, meaning that they're public equities. And so it allows an investor to have a regulated exposure via just another equity that they can trade on their brokerage account, just like anything else, right? No different than buying Robinhood or Apple. You can just buy that underlying equity. And it opens up the U.S. equity capital markets. And so I'm sure Sebastian is going to talk about how you can use an ATM or you can issue equity to raise capital because you have access to these capital markets for the purpose of buying more crypto. I think the most famous example is Michael Saylor with MicroStrategies, rebranded Strategy. And if you look at what these companies attempt to do, they attempt to increase what's known as an MNAV or a multiple to their net asset value, and to increase their crypto per share. Those are two of the metrics that we tend to look at. And if you look at performance of a company like Strategy, I think over the last 5 years it was up like something like 11x. I'm sorry, Bitcoin was up around 11x, but Strategy was up like 22x because they were able to structure using some financial engineering and focusing on that MNAV and those shares and crypto per share to drive that almost like a leverage exposure to get that 22x. So those are, and there's ways that we think about how structures work best. But I'm sure Sebastian, you probably have a slightly nuanced view of how I described it.
Sure. I think all that is great and accurate. What I would simplify is to say is it's a corporate that you hold in your not your checking account, your brokerage account, as Chris mentioned. And either or with the use of leverage or deployment, and in some cases both, right? A digital asset treasury is seeking to create a better longer term return than the underlying token, whether it's held in your say your Coinbase account or whether you own an ETF, right? The idea is that the addition of a corporate structure gives you the ability to do a variety of things, right? But at a high level, it's providing, better forms of leverage, which is what MicroStrategy or strategy investors there would say that they have is that they are able to leverage the corporate structure to create a better form of leverage than what an underlying individual investor would be able to do by themselves, right? So that's in one way creating a better form of leverage to lever the return of the underlying token that they want to be exposed to. The flip side of that is you have a permanent capital vehicle that that gives one the opportunity to deploy the assets in a way that you would not be able to do if you were either an individual investor in your own account because you don't have the sophistication or the size, or you're in an ETF where where the vehicle itself is constrained from doing those things. So we would say that done correctly, and there's choices here, right, between leverage and deployment and mixes thereof, but done correctly, a DAT can have a higher expected return than the equivalent ETF if you look over a longer period of time and presume a positive return. Now, I would also say that leverage cuts both ways, right? So any strategy that in a DAT space that is looking to take on leverage, right, is presuming very basically positive long-term returns. And if that does not occur, right, then that strategy will actually underperform the underlying crypto asset because they've taken on leverage to get exposure to something who's gone down.
Yeah, one thing to add there, Sebastian, generally speaking, ETFs seek to have an MNAV of 1. And they're very rigid instruments because for the most part, you have daily liquidity requirements. And one of the challenges that we've seen is that if you're looking at a staked asset like Ethereum, we've seen the unbonding queue be weeks. And so it's very hard to reconcile getting a staked ETF if there's a long unbonding queue versus the daily liquidity requirements of an ETF. And so what the corporate shell allows you to do is to be much more flexible via a permanent capital structure to hopefully be able to drive that increased yield, which then accretes to what we call the MNAV or the multiple to net asset value.
Great. Yeah, so I think adding to that question, right? So the MNAV and that seems to be the primary multiple. A lot of institutional investors, crypto natives believe that DATs may push a lot more institutional money into cryptocurrencies. There is a second group that believes this could cause the next crypto crash if, like, as you can see, there's an excess supply potentially of DATs. If a lot of DATs start trading below the MNAV, would this lead to the reverse? Like, as it's a synthetic levered product, it's fairly new. Would you see money flowing out of the system or a crypto crash or a price crash if all these DATs crash?
I can take a crack at this. So it's always hard to know what's going to happen in the future. If we did, be a lot easier, right? But in the case of any market crash, there's usually some sort of unnatural buildup and flow of funds that is unique and different and large, right? And usually with that, there is a very high amount of leverage, right? Now, I think what we can look at in the crypto space today, and actually, I believe Galaxy has the best data on this. They put out some research not that long ago that shows the total amount of leverage that's in and around the crypto ecosystem, right? And that's inclusive of whatever is going on in DATs, right? And I'll come to DATs in a moment. But if you look at the overall amount of leverage that's occurring in the crypto ecosystem, we are well below what prior peaks were in the 2021 cycle. And so that doesn't necessarily call the all clear, but it does suggest that we are still in a fairly healthy environment right now, whilst the pipeline to new DATs seems to be closing rather quickly, right? Because if you look at the overall ecosystem today, most DATs are actually trading at or below their MNAV, not above it, right? And so that means it's much harder for any of them to raise capital going forward in the short term, right? And it's very hard for any of them to actually get out the door. I've spoken to multiple people that were going to join a DAT and that didn't happen, right? So it does seem that the door towards DATs, new DATs is starting to close. And the leverage that exists right now is actually at an overall market level not that high and not really a cause for concern in general. And now in terms of the mechanics, it's interesting. If you look at ETFs, the money can go in fast and the money can leave fast, right? Because of create redeem. In the case of digital asset treasuries, obviously that is a very different dynamic. So we would say it's unlikely that they are going to be a systematic source of risk, in part because they are effectively permanent capital vehicles. And yes, they can sell down their crypto to buy back their stock when put under pressure. But that is, something that's going to take time. It won't all happen all in one day, number one. And number two, the actual level of leverage that exists in general with respects to DATs is actually not that high. But those would be some hot takes. It's always impossible to predict the future. Chris, I'm curious what you think.
Yeah, so as we look at DATs, there's like 5 different things we like to look for to make them successful. The first is time to market. The market has to be ready for them, eager, and so timing is important. The window has to be open. Obviously, you want to make sure that the token has good fundamentals, because if you're driving that, if you're trying to drive that implicit leverage, if the token is doing very well and it's got great fundamentals, that the equity price should benefit. We like to see foundation alignment. That coordination is important. I think personally that in the future, many DATs will become like the labs entity, the public-facing entity for many of these protocols. The next thing is perhaps the most important, and that is the management team, the advisors, and the asset manager themselves. These are the folks who have to have the understanding of both treasury operations, how to reserve capital in case there is a negative MNAV to buy back shares or to do whatever it takes to defend the share price. People who understand how to drive that yield and to create that MNAV. And so those experts are hugely, hugely important. And the last thing I would tell you is you need a kind of KOL or key opinion leader or somebody who can tell the story. Now, this generally isn't like, somebody who's really got a zillion followers on the internet. It needs to be the right type of KOL, someone who can translate the story, someone who can tell it to those traditional equity investors. And so as far as macro market structure goes, I think we still have a big gap. And I love DATs. I think they're here to stay. People ask me all the time, is this frothy or is it going to be, is it part of permanent market structure? My answer is yes. Obviously, there are some guys and ladies who don't know what they're doing. They'll get shaken out, but this is very, very important. But we still are missing an important structural element to ensure that DATs achieve their full potential. And to me, we're lacking a futures business. We're lacking futures in the United States. And so one of the most important trades you'll see, a lot of people will go long and they're happy to go long. And they can even potentially go short with equities, and that's wonderful. But one of the big unlocks that we're still missing are what I like to call basis trades, where you buy the DAT and you sell the future. Fact is, we just don't have regulated futures. And what institutions want to do is they want to trade the fully regulated stack. The great thing about an ETF or a DAT is that it's regulated. Futures in the United States are regulated. So buy DAT, sell future is a great trade if you're in what we call contango, where the future price is higher. Oh, and by the way, if you buy the spot and sell the future, spot or DAT tend to go up. So people like that as well. So to me, this is one of the gaps. There's an important risk management gap still in the ecosystem in the United States, working really hard to solve it. But again, I think we're at early days of the DATs.
Yeah, thanks for flagging that out, Chris, especially the factors to look at while summarizing or evaluating a DAT. So, in terms of the underlying asset or cryptocurrency, how can companies evaluate what cryptocurrencies they should use for the DAT? What are your opinions about DeFi lending, staking, all being part of the digital asset treasury strategy at this moment? Uh,
There's a couple
Sebastian,
questions in there. I think first on asset selection, look, we are very unique in what we are seeking to build here versus the rest of the industry, right? And I think that there's a phrase in England, horses for courses. I think both of these things can possibly work, but people have to make a determination. Now, the only free lunch in markets is diversification. And that's the path that we have chosen, right? In the case of ReserveOne, in the business and portfolio we intend to have. Now, what almost everyone else has done is done something else, where they've decided to feature on a singular asset. Now that has a lot of merit, and I'll go into that right now. And it does actually connect to your comment about DeFi. You need to be able to scale up on your particular asset and get the most out of that asset and its ecosystem, right? We intended to seek that in our own business, but in general, people are selecting, say, Ethereum or Solana, or the flavor of the day is now Avalanche. A deal most recently was being done on that chain, and the idea here is, well, basically at a high level, you have to believe deeply in the particular asset if you're going to go a single asset DAT, right? And one thing that I think founders need to think about is you're building a business on a singular asset, on a singular ecosystem, right? And that firm that you have built on that singular asset, on that singular ecosystem, right, is exposed to all the volatility, risk, and upside that is coming from the token and the associated blockchain, right? And so that is a big decision, right? And also another decision is who's already doing it. I think Chris's contention that integration between the DAD and the foundation is pretty interesting, and the ecosystem. So I think what's important is to really be cognizant of what you're building and why, right? We have a goal that we're trying to solve for. We have like an investor we're trying to solve for in the business that we're building, right? With a diversified book of crypto assets owned in a free float market cap manner. That's our intention. And we intend to lean into yield, and we have the ability to do venture. We're very unique and different as constructed and intended versus what else is out there. So I think what we're looking to build makes sense from our perspective based on the investors we're trying to serve. Also, the diversification that we have in our business, meaning our exposure to multiple tokens, does potentially is a different factor than what, say, an individual DAT may have to deal with, right? So if an individual DAT is built on Solana and Solana goes down, and it goes down for a protracted period of time, Solana will be under pressure, and that firm will have to deal with the potential that their token has been cut down in price. And so I think there's specific things you have to really think about, not only about the risk of being on one particular community and chain and token, right? And then the integration that comes with that, which is very positive, right? So people, there's a lot of kind of push and pull here. Chris, you might have some better ideas.
Yeah, maybe I can talk about DeFi. And as I said earlier, one of the benefits of these permanent capital structures is the fact they have a little bit more flexibility. Now, to the extent they're taking risks, they need to actually disclose that risk every via all the ways that all public equities have to disclose risks. But DeFi is super interesting because they are able to access DeFi, and they can also address those risks of DeFi, but through a thoughtful deployment in DeFi, generally the goal is to generate higher yield than can be achieved otherwise, and leveraging differentiated capabilities and knowledge to be able to drive that yield. I think a couple of things that I'm watching is how do you mitigate the risk? What are those risks? Well, you have smart contract risk, you've got hacking risk. I think the insurance industry is going to play an important role there as these instruments scale, something that I'm watching. Um, I hear you, Sebastian, on diversification. Um, as we look at the individual DATs, it's kind of like underwriting the individual token, and the fundamentals of that token, as I mentioned, is one of those core inputs. And if you have conviction in a particular token, you can evaluate the data as well, and there are different nuances to the valuations of each. But I think that if you're a sophisticated investor, you can go to a single name DAT, just like you'd go to a single name token.
Great. And yeah, I think speaking about risk management and also the DeFi component of that's potentially, what are key AML CFT considerations that companies should look at while setting up a DAT? Of course, this falls more in line with Merkel's theme as well, so would be great to hear from the both of you all about that.
Yeah, I'll take that one. Institutional DeFi, for I remember growing up in the industry and people are like, you can't do DeFi, you're an institution, you're not allowed to, you're not allowed to. That's just wrong. With the appropriate tools, you can take the steps necessary to ensure that you do stay compliant from an AML and sanctions perspective. You can look at pre-execution checks. You can look at post-execution checks. So one of the major risks with DeFi is obviously OFAC and sanctions violations. But I do think that those can be mitigated through tools that are readily available in the industry. Of course, you have to worry about hacking. I think hacking is a huge problem in our space. It's going to get worse. We have $3 trillion in stablecoins coming into the system, and our adversaries are licking their chops. I've proposed some solutions. I've proposed some solutions to that, including maybe reinstating a privateer initiative in the United States. Um, and then, of course, like smart contract risk is something you always got to be mindful of. But look, there are risks with anytime you generate yield, you're taking risk. I do think that there are institutional tools available to mitigate those risks.
Look, we would concur that getting DeFi right is crucial, right? And we intend over time to deploy our assets in DeFi to the degree to which we can get comfortable. The tools that are available now are incredible. And I think at a high level, if we're being honest, it's probably the case that crypto gets unfairly treated in all of this, right? Um, so like if you say, all right, well, I'm engaging in a pool and the risk of that pool is low based on the under 5% of wallets might be in some way tainted. Well, what's the definition of tainted, right? And if we applied the same sort of specific constraints and knowledge in the crypto space that we're able to do with these advanced tools, right? What would we do in the TradFi space, right? There are firms that have paid massive fines for AML KYC issues, right? Does that mean I don't deal with a few of these international banks for how long, right? Well, of course, that's not how they're treated, right? So I think my old colleague Marcel Kasunovich had this phrase. He says, "The new kid on the block always gets beaten up," right? And so crypto very much is the new kid on the block, and it is the disruptive new kid on the block. And so the application of the laws and the concerns, right, that the lawyers will tell you has not been fair and has not been constructive. I think it's really great that the SEC is going out of its way to be supportive around DeFi. Obviously, that is helpful, but not that's not sufficient, right? I would note that the Treasury has actually put out an RFI. Responses are due by October 17th, specifically to speak to tools and methodologies that could be deployed in DeFi so that we could leverage the best of the tools, but also not be worried about unknowingly aiding bad actors and that sort of thing. So I think the momentum is really there. Treasury offering this, the RF has been out for a month. I think those that are listening that are in and around the space should certainly submit, because that is the space where we'll get public comment, well researched, that I think can advance the dialogue, and that would be very useful, because we're not going to get the full embrace of DeFi, which is still, if we're being honest, a rounding error in monetary terms relative to TradFi, until we get a clear guidance from Treasury, across AML, KYC, BSA, CFT, all the acronyms, where we can say, okay, the policies and procedures that we intend to use are sufficient, right? And that's the gap that still exists. But honestly, I think if we're talking a year from now, that will be gone, and DeFi will probably 10x as a space.
Yeah, great. So I think, yeah, speaking about that, like the Treasury RFI, $3 trillion of stable coins are now entering the system. We've seen a lot of regulatory activity this year in the US as well. The Genius Act was passed, the Clarity Act is upcoming as well. Do you foresee any of these would have, like a lot of this is around stablecoin regulation? Would this have an impact on digital asset treasury companies, or not as much?
Yeah, I was just in DC and I'm headed back there on Monday. So just to clarify, what we have seen with Genius and which is now law, right? And Clarity, which is now in the Senate. These are not regulatory, these are legislative actions, right? You need legislation, laws, then those laws go to the regulators, and the regulators have to write rules. That's regulation, right? The issue is in our industries, we didn't have good regulation because we didn't have sufficient law. Now we've passed the first ever crypto legislation, specifically in the case of Genius, right? And now Clarity is in the House, is in the Senate. Will these matter? 100%. Why will they matter? Multiple dimensions. I think one of the, I think in the case of, it's hard to answer this question fully, but this is a big deal because this is something we've never seen before, right? So the impact of this is ultimately going to be clarity as to what we can use and how, right? And once you have clarity as to what we can use and how, then it's highly likely you're going to have an embrace of these technologies to do a lot more with these tokens, right? And these networks. Right now, we have a bunch of really innovative products, right, that are being underutilized because we don't understand what is exactly a commodity or a security, right? And for that reason, many corporations can't touch these things, right? So to be specific, Clarity, which is the market structure bill, intends to provide clarity as to what is a security and what is a commodity, right? The current writing of it is, I think, actually quite good. You have something that says, all right, you have a mature blockchain, Bitcoin, Ethereum, and then you have non-mature blockchains, right? And a path to make them mature. And in either case, they are commodities, and the regulator is the CFTC. These are huge leaps forward. What's the impact for DATs? Well, it's our read that if Clarity passes as is or close to it, that then the CFTC becomes a regulator of spot digital commodities, right? So even though the Commodities Futures Trading Commission, they become an actual regulator of the spot, right? Which then means that those that are principally in the business of pooling interests to own spot digital commodities, then likely they become commodity pool operators, which is to say it's our expectation that if legislation passes, that almost all DATs will have to, in the US, will have to become CPOs or commodity pool operators. Now, Chris and I both worked at regulated houses for basically our entire lives. This is something that we're quite familiar with. This is probably for us, it would be, viewed as a positive and something we're quite familiar with. Might be others in the space that say, wait a second, I didn't sign up for this, right? But I don't think it'll be a big deal either way.
Now, Sebastian, on the other side, if tokens are deemed securities, in the last administration, that was kind of a death sentence. Here, you would be subject to the investment to register as an investment advisor, right? Which has some complexities if you're a DAT. And so like that adjudication of commodity versus security is super important for you, right?
Oh, well, so good point. With respect to the designation, whether it's commodity or security, the current legislation for the assets that are expected to be in our portfolio have no impact. But you are absolutely right that a DAT that was thinking about being 100% on a particular asset, right? If they then find out that their asset is a security, well, they have a problem because DATs in general cannot own more than 40% of their assets in securities. Otherwise, they fall afoul of the Registered Investment Company Act, right? So it can make very much a difference if we indeed see that many of these assets that might be commodities actually end up being securities. But my presumption right now is that most of these assets a very large percentage of these assets are going to be digital commodities, but they will be viewed as non-mature, right? Which essentially gives them time to mature. And if they don't mature, then the SEC could turn around later and down the road and say, well, actually, that's a security, right? But it is true, DATs that were launched in single assets that are high risk of being considered a security, that's that's something that they should take very seriously with their legal counsel.
Yeah, I guess I'll just add a couple cents on the regulatory and legislative front. I think that there's a lot of structural buying that's made possible by some of these recent actions across the administration and the Congress. So the stablecoin bill, the Genius Act, if we believe the Treasurer, the Secretary of the Treasury, that this is going to result in like up to $3 trillion coming on chain in the near future, that's a pretty big deal for crypto markets. Why? And one of the benefits actually for DeFi is that there is no interest because people aren't just going to like let those stable coins sit there and because without interest they're depreciating assets. So they're going to go into DeFi. Or they're going to buy alts. And so that's some nice structural buying because where do you get that interest? You get it from DeFi. And then eventually they're going to call up their neighborhood agent and say, agent, you're better at optimizing this interest than I am, go for it, right? So very, very nice structural buying of crypto through the stable coins. You have the 401ks that have now been authorized to buy crypto, another structural buyer. And then the third structural buyer are the DATs. So this is just very, very positive for the crypto community. Sebastian's spot on. The Clarity Act they're trying to figure out market structure. Personally, I talk to DC all the time. I know there's a lot of people that are excited. I think it's going to be really, really hard. But the good news is that you have an SEC and a CFTC that are working together. And I'm sorry, I'm going to go back to it again, but that's where futures come in. Because if futures are listed in the near term across many of these different alts, that's one way to adjudicate these tokens as commodities. So that's a market that I'm looking at very close. And to the extent that you have robust futures in the United States, you'll have 3 years of precedent that these are now being treated as commodities. It's kind of hard to unring the bell if a new person shows up and is like, wait a second, I disagree. Well, gosh, we've already had 3 years of commodities trading via the futures market because the CFTC directly regulates derivatives on commodities. So that's an area that I'm working at. So my point is that even in the absence of market structure, you're going to see precedent occurring that's going to help cement the classification of these assets, which is going to feed right back to DATs, which is great because they'll be able to have that clarity, in the absence of law. I'm hopeful it gets done, but we'll see.
Great. So, yeah, I think overall regulation is definitely a positive. We just have to be aware that like most DATs face the risk of if a certain token is counted as a security, that could definitely affect their structure or their allocation in the future. I guess with that, like one of the key questions or like how do you view the outlook over the next 5 years with respect to digital asset treasuries? What do you think 2030 would look like in our space right now, considering no one had expected that 2025 would be so good for crypto, the DATs would emerge? What are some unique things that we might expect 2030?
Go ahead, Chris.
You go, man. Come on.
All right. Look, I think before we talk about, I think we have to back up a little bit and just also talk about the macro context because that will feed down to everything. At the end of the day, with Bitcoin specifically, um, it seems like not much is going to change here, right? What I mean by that is I guess the phrase Lynn Alden says is that nothing stops this train, and that's referring to governments, the lack of fiscal responsibility or fiscal sustainability that we generally see in, say, the G7, right? And okay, there's been a new markup of the big beautiful bill and from the CBO, and maybe it's not as bad as it was, but it's certainly even in the more bullish or positive view, it's still not cutting the deficit, right? As far as most people look at it, right? So what does that mean? We still have we still have an economy that's over levered for most people's preferences, not tending towards meaningful fiscal sustainability. And so that just means down the road, we have still this monetary fiscal problem, and that leads likely to Bitcoin approximating gold, over time. That's been something I've believed in for some time. And, in my mind, Bitcoin is a $1 million asset, and it is just trading at a discount to that $1 million value, day by day. I mean, today it's at 113K. I think it's notable, for example, that Bloomberg itself does not price it as $113,000. They price it in millions, right? So I think that like that's big because we're talking about an overall space that, the core asset, 60% of the market cap, give or take, may well still 10x from here, right? So like we can't lose sight of that. And then we have Genius Now Law. We have Clarity. I think like I'm a little more bullish on Clarity getting done, but let's just say it gets done somehow, some way between now and end of Q1 of 2026. Then we are turning these tokens and these networks into legal programmable infrastructure for finance, right? And we've just never had that before. So what does that mean? I mean, I think that space also has a chance to 10 or 20 or 30x, depending on what particular ecosystem you're in, because we're going from a world where it's unclear if you can use it to, yes, you can, and it's better than your alternatives. That's a huge flip to switch. And so what does that mean? It's a very bullish environment longer term for these businesses. And there's a lot more capital that likely is going to need to shift into this ecosystem, and they will do it because it'll make sense. So for DATs, look, I think the space itself could evolve substantially. We're seeing now M&A, and I think the market is also changing its view as to what it values, and the market changes its mind day to day. So I think it's hard to say, but it does make sense that we have a more durable and active connection between crypto and the traditional financial markets, and that is DATs. And in my sense is that more durable financial connection, that more durable active connection, DATs, is likely to do well in an environment that has such a bullish backdrop.
Yeah, for me, I think that the coming years are going to see the absolute implementation of what we call internet capital markets. And this is going to change everything. And you're also going to have an AI layer on top of that, which you're going to see much more robust global trading. So let me unpack what I mean by that. Everyone thought that tokenization was going to be this humongous thing where you take real world assets and you turn them into tokens. And what we've seen with DATs is the opposite. We take equities and we buy a bunch of crypto. So it's the complete opposite shell. Eventually, we're going to tokenize those DATs. And I believe, I mean, think about that. You go crypto to equity to crypto again, kind of weird, but makes total sense. Let's talk about what internet capital markets mean. So if you look at our IPO market, it's been relatively dead before this year. I think in 24 it's like $30 billion raised. Meanwhile, the meme coin market cap was like 140 billion. Do the math. That's crazy. Why? Because global markets are insatiable right now. And once we're able to put tokens of value, i.e. equities on chain, and navigate some of the regulatory complexity and normalize that space, you're going to be opening up global markets. And I think the demand's going to be insane. And tokens make that possible. The killer use case of blockchains is capital formation. I can't wait to see DATs get distributed on these internet capital markets, but it's not going to be the tokenization of the past because tokenization actually just died. What we've seen recently is a move away from this quote RWA. I hate that acronym, but this quote RWA tokenization, where you take a asset, you lock it in a box, and then you issue a token, and off the token goes, and it's all fun. No, we're going to see canonical issuance where there is no asset in the box. That token is the equity, and that saves incredible costs, delivers incredible efficiencies, and you're going to see this entire space tokenize and go off into internet capital markets, be much more global in nature, and then the velocity of trading and activity will pick up, particularly with bots and AI. Of course, we're going to want proof of humanity to navigate this complex space, and that's an area that we're very focused on. But yeah, you're gonna see an incredible period of innovation, all due to the regulatory unlock that we're seeing with this administration.
Right. Internet capital markets. I'm sure we're all excited by that. Before we wrap up, I think the last question before we move on to Q&A from the audience. So, do either of you have a favorite DAT, and preferably not your own DAT? So, Sebastian, maybe starting with Chris, do you have a favorite DAT?
We were very, I think if you can check public records, we were very involved in the world that called Orbs. Not investment advice whatsoever. But again, how do you bring together those elements that we spoke about and utility? Those are things that we always look for. So again, yeah, not investment advice. That's public information, but that was an interesting deal.
I have to say I do not have a favorite DAT, and obviously I won't speak about my own DAT. I do think that the space is going to, overall the space is likely to consolidate. I think there will be winners on individual chains, and I think that investors should pay attention to who's making progress and who's not. I think in the case of the DATs, I think there's also going to be a lot of learning as to best practices. And, these are relatively new businesses. And also, they're very different. I mean, one thing that we haven't really talked about, we don't have to go in detail, but I mean, part of my, I would, let me correct the record. I think for Bitcoin, it's hard to not like some of the things that Strategy has done. I reviewed Michael Saylor's presentation where he was at a conference in New York recently, and he spoke through Strike and Stretch and Strive and all of these various instruments that he's been making. I find it fascinating, and I do think that let's say TradFi investors who just simplistically think that MicroStrategy should trade at 1x NAV are really being a little bit lazy in terms of doing analysis on what MicroStrategy is actually doing. And I think Chris said earlier that they're almost like that these DATs can become a key part of like kind of the market infrastructure of a particular chain. I think that is true in the case of MicroStrategy, and they're delivering or seeking to deliver a different outcome, and they're doing it with a differentiated approach on the liability side, specifically more recently with their preferred equity issuance, right? I think that's really interesting, right? And I do think that DATs that are doing things that are really unique and interesting are likely to probably do well over time in comparison to the overall universe.
All right. Yeah, with that, this brings us to an end of the webinar. Thanks a lot, Chris and Sebastian, for your insights. I actually received multiple messages during the webinar about how insightful this was and how useful this was for a few of our audience members to understand that. We do have a few audience questions, so I'm going to open up to that. Either of you can pick the question that's relevant for you and go for it. So question number
Well,
one,
go ahead. Oh,
Sorry.
this is with MicroStrategy with regards to its maturity wall. Um, Look, I can't really speak for, and I won't speak for MicroStrategy. I will just, if investors are looking at MicroStrategy, I think the most important thing is to slow down and do a bit more work. I've spoken to 10 bears on MicroStrategy in the last month, and not a single one was aware of their newest member of their board, which was a gentleman by the name of Pete Brigger, who came from a little firm called Fortress. Now, if you're a historian in crypto, Fortress is really important, right? Why? Dan Morehead was at Fortress for quite some time, and his initial funds that he was going to launch were actually going to come out of Fortress, and from that came Pantera. And so Dan, the idea that Pete Brigger has joined the board of strategy, right, whilst he's running a $40 billion, credit platform that's mostly focused on the downside, right? I think that's really important. I think it's also quite important for the industry, right? If the industry is going to evolve and get better, you want to see people like Pete Brigger engaging, right, and helping to guide companies to the degree to which he can from the board of strategy. So I think that, I think that's a key feature in terms of how they're going to manage it. Look, they've got a unique capital markets access, and as long as Bitcoin does reasonably well, my expectation is generally they will have no issues, right? But with any levered play on Bitcoin, if Bitcoin were to have a really, really, really bad price realization at the time and their collateral's under pressure, well, that's a different world, but we're not in it.
Right. Just for the audience, I'll probably repeat the question, Sebastian, and then would be great to get Chris's insights on it as well. So MicroStrategy faces a significant maturity wall as a large portion of its debt comes due over the next few years. So technically, if they cannot refinance due to the macro environment, so basically Bitcoin's price going down or pay down the debt, will they be forced to liquidate BTC holdings? Will forced sales take us into a liquidation spiral with lower spot prices? So I think Adarsh, who's typed the question out, is probably a big MicroStrategy bear. So yeah, Chris, would be, of course, Sebastian, those insights are very helpful. Chris, what are your thoughts on this?
No, I don't have any further thoughts beyond what Sebastian said. I think that these folks are pretty sophisticated operators, and they've demonstrated an ability to navigate a number of different market conditions. Like I said previously, one of the most important things to underwrite with any DAT is that are those investment managers who understand treasury operations and how to achieve yield. And the smartest ones do have the appropriate reserves when stresses come to defend their stock price. And so that's one of the things that we look to very closely when we underwrite DATs.
All right. Question number 2. Do you expect DAT to DAT M&A to occur due to mispricing, differences in cost of capital, or lower MNAVs?
I think we've already seen it. So for sure. And the question is, are these entities going to be merging and acquiring other DATs? Yeah, I think they will. Will they go intra token? I think that will happen as well. What if you're X token, you buy a token you don't believe in, you sell that token, take the proceeds and buy more of your own? Like, these are all iterations that I expect to see. And then they're also going to be investing, buying, and acquiring important companies within their ecosystems, I think, as they build out their operating companies as well. So in my discussions with many of the DATs, there's a number of different vectors, and I totally think that M&A is going to be on the table.
All right. I think that's it in terms of questions. We have a few minutes left. Any last
Yeah,
closing
I'll just add
remarks?
on to that. I would suggest also, I believe that M&A will obviously happen. There's lots of companies with very similar or almost identical business plans, right? With not a lot of meaningful differentiation, right? And they have costs. And so the market will force efficiency. That's what the market always does, right? The market wants a return on investment. And so we've seen a transaction proposed already. There's likely to be more. When I think about that from our business, I don't know what will happen, of course, but it's good to have people that have experience in these types of things Jamie Leverton was the CEO of Hut 8, and she led the largest merger in crypto at the time with American Bitcoin. And then obviously we've been supported by Chin Chu, who's a former head of private equity at Blackstone. So the environment is changing, and I'm glad that we have a good team in that context.
All right, perfect. Any closing remarks for the audience, Sebastian? I think that was a good summary of risk management.
I just say, look, we're really excited what we're building at ReserveOne. It looks like we'll be the first and possibly only large diversified digital asset treasury, at least based on the current what we see in the marketplace today. And that obviously can change over time. So that is not a guarantee of anything. But we're really excited about what we're building and the relative uniqueness that it appears that we may have when if we have the opportunity to list in Q4, which is the current expectation. So we're excited about that. The intended portfolio is anchored in Bitcoin, approximately 80%, and then about 20% in alternatives. And having the ability to deploy those, which we expect, and then also the ability to do venture capital, will make us a very different story in the investment landscape for investors. So we're excited to bring that to market, and we're excited to see what happens with the industry on the way.
All right, Chris, anything you'd like to add as closing remarks, and then we wrap up the webinar?
When it comes to DATs, I think we're at the beginning of the story, not the middle or the end. You're going to see a ton of innovation in the coming days, weeks, and months, and I'm just happy to be part of it. But this is part of an overarching theme of convergence. Before you know it, there's not going to be DeFi or CeFi or anything TradFi. It's just going to be Fi, and I think this is another step forward in that direction.
Right. Thanks, panelists, for your time. So Sebastian and Chris, really appreciate all your insights. And of course, we're all going to see how DATs evolve, merge, potentially have M&A as well. And yeah, quite excited about internet capital markets and how that would be the next step in terms of the crypto markets merging with traditional finance. Right. And thanks, audience, for your enthusiasm in attending the webinar.
Thank you.
Thanks, guys.
Thanks, everyone. Bye.